let me go to the final bit of the puzzle, which
Yeah.
is your fastest growing piece of the pie,
Yeah.
which is telling me that the South Sudanese, whilst fighting each other, are drinking lots of beer, Charles.
Yeah.
Up 100% EABLI.
Yeah.
How would you know? Is that South Sudan? Is that pure South Sudan, or is it? Would you say there's a
No, it's not purely South Sudan, but it's a lot about South Sudan. So, yeah, in South Sudan, we've had a presence there for a long time.
Yes.
Our brands have been available to consumers in South Sudan for a long time, longer than other companies' brands, and we've got a healthy market positioning as a result. We haven't always had ease of market access, and I think I talked with you once before that our route to market to South Sudan used to be that we would go and we would take cash off of a distributor or a wholesaler and say, send a truck to Nairobi, we'll give you the product when it arrives, and then you can drive it back again and then you can sell it. That isn't an optimal way of doing business. So we've now opened a distribution depot in Juba, and we either ask the customers to come to the distribution depot, which is 10 kilometres rather than 800 or whatever. So we either ask the distributors to come and collect from Juba, or actually we might even deliver ourselves.
yes?
Um,
And this unlocked a lot of
and this has unlocked a lot of
latent
potential.
demand.
The other, we've done some other things. So we've also switched from bottles into cans.
yes.
And retailers and consumers quite like that switch. So they like having the flexibility and the portability of a can. And we've increased our marketing activities in South Sudan as well. And the combination of all of those things working for us.
Charles, you brought up this issue about currencies,
Yeah.
I mean, South Sudan is a good segue into this currency situation.
Yeah.
How are you coping with that? Because
Well,
if
it's
you
tough,
look around
actually.
Africa right now,
Yeah.
we're seeing a huge amount of currency volatility.
Yeah. So I think there's something about volatility. I think there's also something about availability.
Yes.
And from an availability perspective, we can do even more trade than we're doing in South Sudan and in Rwanda than we're doing at the moment. Unfortunately, we can't always convert that trade into a hard currency or into Kenyan shillings or into the US dollar, for instance. And that exposes us to the risk of devaluation and never being able to get the money out.
Yes.
So we've got governors on our performance, governance on our performance, so that in order to do some more business, we need to change out of the currency that we've currently got.
Okay. So it limits the
So
growth of the business according to liquidity.
Yeah. So if we were able to secure kind of free flow of currency, I can grow that business even more rapidly than it is at the moment. We've got a similar situation in Rwanda as well at the moment. The Rwandan franc, obviously we can trade in Rwandan franc, but then converting out of Rwanda is difficult at the moment. The other currency challenge that we've got is that currencies in East Africa are generally weakening against international currencies. And then within East Africa, the bulk of our trading and all of our reporting is in Kenyan shillings. But Uganda is 18%. Yeah. So we've got a weakening of the Ugandan shilling, a weakening of the Tanzanian shilling, and that's creating some within the EAC issues for us, particularly as we've got a network of breweries and we've chosen to supply Uganda with some of our products and rather than brew it in Uganda. So what are we doing about that? There's a couple of things. One is we have actually 18 months ago decided to shift our procurement strategy from cheapest anywhere in the world to if we can possibly access it in East Africa, we build the market in East Africa, and we've been doing that for local raw material for a while, even though we have been buying from overseas. But wherever possible now, even if it's a little bit more expensive, we buy local. build the market. Over time, prices will come down, is our thinking.
Yeah, right.
It also helps build the economies in East Africa, and we're an East African company, so we get a side benefit. So buying local is one of the things that we've been doing. The other thing is that we're looking at our supply arrangements, and we're saying, is it right that Uganda should be buying from Kenya?
Yes.
And actually, maybe what we need to do is we need to increase the breadth of the products produced in Uganda or produced in Tanzania. And then we've got export opportunities as well now. For instance, we're looking at export of some products out of Uganda into Tanzania now, which would have been much less viable before the fluctuation in the currency. So I think that net will be okay,
yes.
right? It will have an impact on our business, but it's not going to be profound. What we've got to do is we've got to manage our business, and we'll be doing that. So, I think that there will be some opportunities, and we'll try and identify those and then capture them.